when we talk about inflation adjusted, the only things that haven't adjusted for inflation are gold and silver. And that's by design. They were kept down because they are the barometer of the health of the system. And that's Gibson's paradox. That's holding down the assets that are truly measuring the value of the currency underneath it. So, yes, I do think it can go higher than anyone thinks possible. Is $200 crazy? I'm not saying silver's going to $200, and I can see the title of this conversation already. Andy Schectman says silver's going to 200 or maybe 600. But you know what? It wouldn't be out of line to see it at 200. Not even a little bit, Michelle. And I mean that as God is my witness. So, yeah, gold and silver are some of the only assets that haven't found real price discovery. The S&P 500, the Dow Jones, the real estate market, crypto. Okay, these things have found some real semblance of value, fair value, right? How about gold and silver? Just beginning. So sky's the limit, and I do believe that. I don't think we'll have a bimetallic monetary system. And even Judy said that to me as well. I don't think we will. I don't think you'll see people trading silver in to buy candy bars at the store. But I do believe that it has a role as a monetary asset in a dollar system that is devaluing. Gold will have a monetary aspect to it, whether it be with the BRICS nations in their settlement system or backing the Treasury. As Judy says, but look at these states that are saying gold and silver are legal tender. Now, if I had to guess, how could gold and silver reintegrate into a monetary bimetallic system? I think the state of Texas has a good plan where you take your gold and you take your silver, if it's American made, and you bring it to the Texas Bullion Depository. This is where they're going, I believe. And they will check it in. Okay, Michelle dropped off 400 gold eagles and 10,000 silver eagles. And bang, they give you a credit card that says, this is now yours, free to spend at any establishment, and it will just be deducted out of your inventory. This is how you take gold and silver in the 21st century and use it as legal tender rather than going door to door. So could it become part monetary? Abso-freaking-lutely, but I think it will be in a manner like that, like Glint, right? Where you can take your Glint card and spend it. But I think there will be states like Texas, maybe like Florida, like Oklahoma, like Arkansas, that will say, put your money into a state-sponsored vault, get an accounting, a real-time accounting and auditing, and use it as your form of money. And I could see that, absolutely.
Texas may hold the blueprint. Through its state-run bullion depository, individuals can deposit American-minted gold and silver, which is then digitized into spendable balances. Imagine depositing gold coins and receiving a card you can use like any debit card, while the system deducts value from your stored bullion. This model modernizes the concept of legal tender, blending the permanence of metals with the convenience of digital payments. Other states like Florida, Arkansas, and Oklahoma are exploring similar frameworks. This isn't a return to the past, it's a reimagining of how sound money can exist within a digital economy.
The cup and handle formation would tell you that $96 would be the next target. You take the top of the cup, 45-year cup and handle, double cup and handle formation. The bottom of the cup was $4. The difference between the two is 46. Added to the top, which has been broken through, the next target is 96. But where is there resistance in a market that has none above this price level? Where is real price discovery? And you're right. I mean, if you took gold right now, let's see if I can look right here and see what the price of gold is at the moment. If we took gold right now at 41.40 and we divided it by 42, which would be roughly the average price of the last 100 years, and this is not even talking about your inflation adjusted price. But if you took that and divided it by 42 right now, silver should be at $100 an ounce right now, just based upon its 200-year average. But it's coming out of the ground 6 times higher than that. So is it possible $600 could really be a number? I don't know. That would meet the geologic ratio. So I think silver will go higher than people think possible, because you now have an environment where I think it will be very difficult for the West to continue, especially with the Basel III regulations about physical metal versus unencumbered or encumbered futures contracts to hold it down at these levels when there's so much physical demand. So is $200 realistic? Absolutely it is.
Silver's market dynamics are unlike any other commodity today. Analysts point to technical patterns like the 45-year cup and handle formation, projecting potential price targets far above current levels. Adjusted for historical ratios, silver could theoretically trade near $100 to $200 per ounce, even $600 in extreme scenarios. These numbers aren't arbitrary. They reflect suppressed price discovery in a system dominated by paper contracts and concentrated short positions. With Basel III rules tightening the gap between physical and derivative markets, the leverage that kept silver prices subdued is eroding. Physical demand is rising, and real price discovery is approaching fast.
And quite frankly, if you take 4140 and you divide it by 7, which is what Keith Neumeyer will tell you it's coming out of the ground at, the geologic ratio right now between gold and silver is $591. Now, is that insane? Maybe. Is it crazy? Sure. Could it happen? Why not? At some point, don't these two numbers need to align themselves in an asset that is now being reclassified a critical mineral, in an asset where some of the most powerful nations on the planet are buying it using these subsidized prices? And the thing of it is that in an environment where everything has exploded in value, everything, and we've talked about how when my dad graduated college in 63 and married my mom, that's $6,000 a year. He and my mother could live comfortably together for a year on $6,000. Really? Or a brand new Corvette in 1973 was under $8,000 and now it's $120,000. Really? I can give you a million examples where the price of inflation is exceeding. Look at the price of a home in 2005, 20 years ago, was $240 or $240,000 an ounce, or $240,000 rather. And now, and gold back then at $400, what was the number? 240,000 divided by 455. That's 527 ounces of gold. The average price of a house today is about $450,000, but that 527 ounces of gold right now is worth what? Over $2 million. So
gold and silver act as mirrors, reflecting currency debasement over time. Consider this. In 1973, a new Corvette cost under $8,000. Today, it's over $120,000. A median U.S. home in 2005 cost about $240,000, or roughly 527 ounces of gold at the time. Those same ounces today are worth several $million. Precious metals quietly measure inflation in ways official statistics cannot. Governments and financial institutions have long tried to suppress their signals, a phenomenon known as Gibson's paradox. But as inflation spreads globally, these assets are revealing the true scale of currency devaluation, and investors are paying attention.
When we talk about inflation adjusted, the only things that haven't adjusted for inflation are gold and silver, and that's by design. They were kept down because they are the barometer of the health of the system, and that's Gibson's paradox. That's holding down the assets that are truly measuring the value of the currency underneath it. So yes, I do think it can go higher than anyone thinks possible. Is $200 crazy? I'm not saying silver's going to $200, and I can see the title of this conversation already. Andy Schectman says silver's going to 200 or maybe 600. But you know what? It wouldn't be out of line to see it at 200. Not even a little bit, Michelle. And I mean that as God is my witness. So yeah, gold and silver are some of the only assets that haven't found real price discovery. The S&P 500, the Dow Jones, the real estate market, crypto. Okay, these things have found some real semblance of value, fair value, right? How about gold and silver? Just beginning. So sky's the limit, and I do believe that. I think it would be silly to expect there never to be a pullback, but not the pullback that people are thinking. I don't think that's even possible. And if it's such a small, irrelevant market, why do 8 banks hold the largest concentrated short position in the history of any commodity traded on COMEX, these Western banks? And by the way, if you want to pull up it, the article is from Monday, October 13th, yesterday on CNBC, and it's titled $100 Silver. analysts say the metal could double from record highs on CN freaking BC.
Mm.
So, we're beginning to see mainstream saying these kinds of things. But yes, I think anyone who expects things to move up straight line without pulling back,
But could we see a dramatic pullback? Could we see a dramatic?
No, I don't think so. And if it is, it won't be long lived. Look, to see a market that falls by $3-4, to me, that was always dramatic. Although prices are going higher, but it shoots right back up. Could you see it? Yeah, why not? And in 2020, silver went from 20 to 12. But when that happened, you had 100% premiums and 12-week delivery delays on everything physical. So the physical demand right now would eat that up for lunch. And I think anyone that would be silly enough to try and short the market in that manner, naked shorting, would face a very quick existential threat and an exit from financial services when they get called on the carpet for delivery. So it just seems to me that maybe those tricks are from days gone by when no one really cared too much about gold and silver. I think we're moving into a different reality right now.
Despite being called irrelevant, gold and silver markets attract immense institutional interest. 8 major Western banks hold the largest concentrated short positions in commodity history, a clear sign of their systemic importance. J.P. Morgan, fined nearly $1 billion for market manipulation, remains custodian of the world's largest silver trust. In October 2025, CNBC reported that silver could double from record highs, a rare mainstream admission. Meanwhile, central banks and BRICS nations are buying physical metal in unprecedented quantities, often at subsidized prices. Behind the headlines, a strategic reallocation of power is underway, and precious metals are at its core.
Think about that for a minute when we talk about the articles that come out of the BS mainstream. You're far more of a journalist than any of these clowns are on any of these major stations, because if that were really so important that the largest commercial bullion bank in the world pays the largest fine the Justice Department ever handed out, $920 million. Many thought they should have been charged with RICO and racketeering, but they skated with spoofing charges, yet they're still allowed to be the major custodian along with BlackRock of the world's largest silver trust and the custodian along with BlackRock of GLD. So, in other words, this market is far more important. That's what this whole discussion is about today, Michelle. The mainstream wants us to focus on the airplanes going back with silver and all of this nonsense. And is it overvalued? And is it going to come down? And no, the U.S. government's reclassified it critical. And 8 Western banks held the largest short position of any commodity traded. And J.P. Morgan, who paid the largest fine the Justice Department had ever handed out for manipulating the silver market, call it what you want, spoofing, it was much more than that, they got off easy, is also the custodian of said largest silver trust in the world. The game is much bigger than we are being led to believe, and that is really everything I'm trying to convey here.
The real story isn't about gold and silver going up, it's about the dollar quietly losing purchasing power. As reserve currency dominance fades, the U.S. may peg parts of its financial system to gold to stabilize borrowing costs. This would mirror strategies already seen in Eurasia and the Middle East. While markets may see pullbacks, the long-term trajectory points to metals playing a larger monetary role, not through nostalgia, but necessity. As governments and investors reposition, the public narrative lags behind. The metal markets are not relics of the past. They're the battleground for the future of money.
Do not focus on what they want you to focus on. Take a step back and look at the big picture. Look what the rest of the world is doing. And they're saying, you guys are idiots. We're going to play this against you. We're going to stand for delivery. We're going to buy doré. We're going to buy concentrate. We're going to buy it from every single corner of the globe until you catch on. And someone in this administration says, it's time to wake up, y'all, and start bringing it home. This is a ruse. And I don't know. If I had to guess, I think you'll see silver much, much higher a year from now. Much, much higher. And yeah, it doesn't mean it's going to go straight up. And I'm not telling people to buy it for that reason. I'm telling you that if the silver market and the gold market go much, much, much higher, that's great. But what it really means is the dollar that you call money, that melting ice cube, is getting much less and less and less in value. It's the opposite way of looking at it. Don't look at gold and silver going higher. Look at the currency that we call money that is used to purchase said gold and silver, which is real money, is buying less and less and less of it. And that is exactly what they want. The dollar debasement trade. That is the only way, if you give up on the reserve status and you peg the back end of the bond market to gold, to have zero upfront borrowing costs, that once you bring back your manufacturing, you have to sell it in a devalued dollar manner. And that's exactly what this is all about. So they're throwing you off the scent again so that people don't crowd them out of ultimately what their trade is. Yeah, you don't want it. We're sending it back to London. BS, we are. We're going to continue to buy more. You watch. The COMEX numbers will show more and more coming in. Some will leave. The arbitrage is real. But the big picture is that's the dumbest thing you could do.